All right, good afternoon. Welcome back here to Trader Minute. Great to have you aboard. I'm jumping on. It's not time to make a challenge adjustment or to even look at the challenge or do anything about the challenge right here. So, not going to do that. Not going to talk about the market itself here. But going to talk about emotions, the emotions of trading. And this is a topic that, I've talked about over the years many times. It's a topic where some people, they love when I talk about it. Others just turn it off and don't care. And I respect both sides. Absolutely respect both sides. Some, you're like, emotions, whatever, next. And for some, it's something you deal with a lot. Every single trade, every single move, you start to feel high anxiety. You start to feel heightened emotions on gains. Lows on losses and those types of things, and it's very real. And anytime money is put into an equation, we as humans, just naturally, there's some emotion, associated there with it, and so different people deal with it different ways. Different people have different levels of emotion. There are some out there who are managing their retirement accounts, big money retirement accounts, and the challenge, they just make the trades and go have fun, right? There are others that, man, they're putting 3,000 on, and 3,000 is a huge life changing amount of money, and for as much as I say, hey, only use what you're willing to risk, there's a definitely a life changing type of an element to it that no matter how many times I say, hey, you know what, that's not the purpose here, it's going to happen, right? So everyone has different levels there, and there's this saying out there on Wall Street, take emotion out of trading. And every time I hear that, I think, well, good luck, right? How are you going to take emotion out of trading? You let a machine do it, because humans have emotions, or at least most humans have emotions, and taking those out of trading is just a very difficult thing, and varies from person to person. Now, can you take emotions out of the decision making? Yeah, you can. Can you take the emotions out? No. And who would want to, right? The highs of trading are fantastic. So who wants to take that out? But with those comes some of the lows. Now, I'm not an emotional counselor. I'm not a psychologist or psychiatrist. I don't have any real training there, and anything that makes me some sort of emotional support expert or anything like that. Nor is it anything I'm interested in being or doing. Right? It is something where I think it takes a very unique type of person to be able to do that, and I don't have that ability here at all. But I can go out and kind of speak to the emotions when it comes to the challenge, and some of the emotions when it comes to trading, from both my perspective and the perspective that I've seen from people over the years. Whenever I look at something and I go, well, maybe there's a problem here, right? Or there's a something is going on, right? The first thing that I look at is the cause, right? So what causes what causes the emotions, right? Because if you don't know what causes them, you really can't get a really good understanding of what is going on. And, for each and every person, it's a little bit different as far as what causes the emotions. But, here's some of the things that, different people will deal with. And some deal with one or two of these, some deal with more of them. But missing out, the fear or the feeling of missing out. They wake up in the morning and a stock is bought out. And they see it skyrocket. And immediately they go, oh, I'm not in that. I should have been in that. Man, if only I were in that, right? It's an emotional response. Not logical, but emotional, right? This kind of missing out element there. Fear of loss. This is a big one for some. Man, it's going against me. What do I do? I don't want to lose what I have, so what do I... right? And it brings that, extra emotion there, the fear of loss. One of the big ones that I see is have to gain, where or people get themselves in a situation where they have to make money or something, dramatic happens in their life. And that's a big cause of emotion. And one that is very difficult to deal with, one that normally leads people into more fear of loss, more fear of missing out, and then leads them to regret, right? And regret can be several things. Sold too early, didn't enter, didn't exit soon enough. This whole mentality of, oh man, I had a gain and I let it go to a loss. Some of that kind of just emotional response that you've heard me, tag the word ridiculous onto. But it's real in terms of a feeling, right? But it's not necessarily logical when you really kind of put it down to it. But, it leads to regret. And people can have those regrets even if they don't have to have gains or they don't have the fear of loss. Those regrets, come into play. For me, none of those really, cause a lot of emotion for me. Right. Over the years, I've kind of learned to kind of tune a lot of that out. Occasionally, a missing out. Occasionally a sold too early type of regret will come in. I'll feel that. But for me, it's very clear what causes my trading emotion, and that is, when a trade gives all signs of going. Gives all signs of working is probably the better word, and then doesn't. Whether it's from an analyst, whether it's the market drives it one way or the other, that's just something that when I look at the times where I start to feel emotion towards the market, that's when I feel it. In fact, if we come in to look at some of the trades, here for the challenge, right? This Under Armour trade was a very emotional one for me in terms of just feeling some of those feelings, right? And not because of what it did after exit, right? But man, it gave every sign it's ready to go, and then it just dinked around for 3 days. It's like, ugh. Yeah, and the emotion I feel is just aggravation, right? You're just like, come on, I know you want to go. Let's come on, just do it. It's just one of those things where, that's where I feel it. That's where it comes in for me. For other people, there could be different causes of emotion, right? There are a lot of different possible causes of emotion. I'm not going to go and get through all of them here, but these are some of the more common ones that I see, when it comes to people. So, how do you deal with it, right? Dealing with it. It's easy to kind of spit out, say Wall Street sayings, right? Which are pretty meaningless and, always have another side of that coin, right? But dealing with these emotions, it's one of those where most people, what do, right? They will go and they will turn things off, right? They'll shut everything down, they'll walk away, right? That's one way people will deal with it. Others will play this would've, should've, could've game, until it just drives them nuts. And this is a very common response that I see that traders have when they feel those emotions. They really get sucked into this game of would've, could've, should've, and start really kind of beating themselves up, really just kind of destroying themselves over this kind of irrational would've, could've, should've element. Others will kind of turn into a sponge. They go and they say, okay, I feel all this. All right, I'm just going to get a lot more information. That way I can make a decision, right? What tends to happen, right? They turn on the TV. They have more channels, more opinions, more thoughts. They look at more information than they normally do, and it starts to become information overload. It only heightens the emotions, right? Others look for affirmation, right? So, for example, right, I have a position right now on Chevron, right? And Chevron is just kind of dinking around, not really going anywhere, not really doing anything, down 16 cents again here today. And, it's not one that I, feel any emotion towards. But, some people, if they feel emotion towards a trade like this, what do they start to do? They start to come into the sites and they go, okay, here's Chevron. All right, what's the news on it today? Okay, Barry leaves the Gulf. Chinese economy stalls. Ooh, Venezuela business. Ooh, will U.S. extend waivers? And they start going into the news. And then even worse, they start going into the message boards. And, things like, finance.yahoo. And if you want kind of, just some of the absolute, worst type of emotional, stuff that's out there, just come into the message boards. I think they still have the message boards. They did about a year ago, but I haven't looked at them here of late. But there are message boards all over the place, right? And where message boards, they're fueled by what? They're fueled by the desire to be right or wrong. They're fueled by people wanting to brag about their wins, wanting to defend their losses, wanting to call and pick the next thing because it makes them feel good, right? And so when traders start to get emotional, they start to go into this cycle of looking for that affirmation, and they can go find it some of the absolute worst places there with it. And so what are they? They're now kind of heightened even more, and now can they make a decision without that emotion? No, they can't, right? But ultimately, most people, when they're dealing with emotions, they're on the search for right or wrong, right? That's what they're on the search for. It's right or wrong. Am I right to hold this? Am I wrong to hold this? Am I right to enter? Am I wrong to enter? Everything becomes a right or wrong, a yes or no, right? It becomes black or red. They start to forget that the market is all gray, right? The market is complete gray area. Heck, even from the rules from the SEC, it's all gray area, right? There is probably nothing grayer out there than the market, right? And it's one where there aren't hard, fast rules. There aren't hard, fast, things where you say, well, this is always the case or this is never the case. And this is always right or this is always wrong. And in a lot of times people will try to deal with the emotions by adding rules, right? They say, well, I'm feeling these emotions, so let me go and add some rules to deal with them, right? So now I'm going to go out there, and I just watched a trade go from green to red, so I'm going to put this rule on myself. I'm going to go and say, you know what? Never again am I going to let a trade go from green to red. I'm just going to close it. And you know what's going to happen? The next trade, it's going to go green, and then it's going to dip down into the red, and you're going to go, I got to follow my rule, and you're going to cancel it out. And then you know what the stock's going to do? It's going to go on a tear the direction you were trading it in. And then you're going to feel the emotions again. And you know what? You're going to go, traders go back and they say, I got to go back. I need a different rule here. Now I'm going to let things run. I'm going to give myself a little more cushion. I'm going to let things run. And so the next trade they go get into, they say, I'm going to let it run. And it goes from green and it dips into red. And they say, I'm going to be patient because last time it did that. And then the trade just keeps going against them and going against them and going against them. They end up with a big loss, and they go, oh, gee. Okay, next time, they go back to that green to red. And so what are they doing? They're just jumping between rules that really have no bearing on anything. They have no meaning on anything, that are very just arbitrary and are simple responses to emotion. And so that's how most people will deal with emotions, and most people will handle, the emotions. And most of those dealings actually increase the emotional element. The way all of these elements that we've looked at, do they help mitigate some of the emotion, or do they actually just increase it? They absolutely increase it, right? Turning off maybe doesn't increase it as much as some of the other stuff, but the other stuff, increases it tremendously. So how do you deal with it? Well, I don't know. I don't know. I mean, it's one of those where for everybody it's going to be a little bit different. We have pizza night every once in a while, and I tell my wife, when do we have pizza night? We have pizza night when some of my emotions are a little heightened with the market. And I go, sweetie, time for pizza. And so we'll have pizza night every once in a while. That helps me, right? That is something silly, something stupid, but is a way that, I tend to, try to cope. But the one thing that helps in a tremendous way is this word called perspective. Perspective, perspective, perspective. Why? Because every one of these causes of emotion and every one of the emotions and the way of dealing with the emotions, every piece of this emotional puzzle, what does it do? It erodes and destroys perspective. Right? That's what happens. It simply erodes and destroys perspective. And so when emotions are heightened, coming back and saying, okay, let me get the right perspective, to me is what helps me the most. Back in my fund managing days, I used to track and create a worst case scenario, right? What is my worst case scenario? I have all of these things on the board. What is the absolute worst case scenario? Well, I know it's this, that, and the other. I quantify it. And, okay, that's now my worst case scenario. Am I willing to take that risk? Right? Just comes down to that. Am I willing to take that risk? You'll notice I'm not asking myself, well, is it going to go up or down? Am I right or am I wrong? I know that anything can happen, right? I know that absolutely anything can happen. So I'm not sitting here trying to predict what's going to happen and trying to get into that unrealistic element. I go, okay, what's my worst case scenario? If I can live with worst case scenario, great. Great. If I can't, and there have been times I can't, I say, all right, now I have to trim. What you can always do is go back to and say, look, my worst case scenario wasn't acceptable at that time. Yeah, I had good trades on the board. Yeah, ultimately they worked. But my worst case scenario was not acceptable, so I was not willing to take that risk. And you can add that. You can put that perspective onto it. That is something that has helped me a lot. Over the years, it helps me with individual trades. Helps me with, just a challenge. Helps me with, some of the bigger things that I trade or some of the investments. What's the worst case scenario? Can I live with that worst case scenario? If I can, great. If not, I need to move on. But then we get to the challenge. And the challenge becomes a different game. The challenge becomes a game where there is a very clear trend of emotion. As challenge gains go up, the emotion from the community increases significantly more. Does that make any sense? Well, of course, it makes a lot of sense. Why? Well, now instead of fearing losing 3,000, there's fear of losing 10,000, 12,000, 14,000, 40,000, 60,000. Right? And so what happens is as the challenge puts on more gains, the fear of loss increases significantly. What also happens is the regret side also increases significantly. Why? Because you know what? Had I held Under Armour, I would have had a much bigger gain, right? When the challenge is small and we only have 1,000 on the trade, okay, a couple $100. All right, not that big a deal. Oh, we have 4,000 on the trade. Oh man, that would have been 1,500. That's a significant, sizable more chunk to most people. And so as the challenge value increases, the fear of loss and the regret factors, the things that cause emotion, they skyrocket. They don't just go up incrementally. They skyrocket. And I'm talking from a community standpoint on what I've seen over my my years of trading and what I've seen over my years of fund managing. Right, when we were up 25% in a quarter, the emotions and the phone calls that we got were very different than when we were up 1% or down 2% or down 5%. When a challenge is at 1,500, the emotional responses that come in are very limited. Right. Most of them have to do with missing out. That's it. Or this have to gain, both. But we don't have this mounting fear of loss or mounting regret, factor that comes into play when it comes to the challenge. And so we go, well, how do you deal with it? Well, perspective, perspective, perspective. You hear me say a lot. The challenge is a process, not an event. No one trade is going to make or break the challenge. And I will continue to say those. Why? Because they're all about perspective. They're all about the proper perspective. Is there anything, right? And I'm sure most of you that are listening to my voice right now, you've read through this front page of the spreadsheet. The setup and the execution, the ATR method, the sorting methods, the intro video link. You've probably come in, you've traded some of these, right? Is there anything in here that deals or that makes decisions based on these emotional factors? Any of these happen out of a fear of missing out or fear of loss or a have to gain? Any of these have regret? No. None of them. None of this has any of that in it. What is all this based on? It's based on the odds. It's based on the odds of the statistical odds of things making money. And that's what the process is. And so if I were to go out and I were to say, you know what? And I did, and I wrote it in my notes. I didn't say it on video, and I will not say this going into a trade. I hated the Intel setup. I hated it. It didn't look right, didn't sit right, didn't feel right. I didn't like it at all. Every part of that emotional factor, I just didn't like. Now, it's not the first trade on the board that I felt that way. I've already talked to you about the gold. I didn't like it. I didn't like the entry point. Thought, man, I'm chasing it. I really like the CSX entry, right? I really like the Disney entry back here. I like the Under Armour entry back here. But does any of that matter? What if I now were to start making decisions based on, I like this or I don't like this? What happens to this process? What do I now introduce? I now introduce all that emotion. Is it going to help with increasing gains? Is it going to help mitigate losses? Nope, not at all. All it's going to do is drive me crazy and increase the chance of loss and mitigate the chance for gains. That's it. That's all it's going to do. Bank of America moved on this second day, right? We were in it. And I was even on video, and I mentioned at the time, man, I think it stopped. And I would have loved to just get out. And in hindsight, yeah, maybe I should have at that moment. But what happens if I start doing that? What am I now introducing into the challenge? I'm introducing the emotional factor. Do I have a probability, a statistical measure to tell me, hey, this, and this? No. I can look at Bank of America and say, yeah, that would have helped and that would have made it, better. But then you know what? If I do that same thing, I miss out completely on Intel. Right? Things don't work in just the, most of the time all we remember are the things that if we did it, it would have worked. We forget that, hey, because we didn't, we actually were better off. Right? It was one of those things I talked about last week with the time stops on Disney and on Under Armour. Yeah, we would have been better off ignoring the time stop for a day. But had we done that on J&J and JD early in the challenge, what would happen? We would never be in a position to trade Disney or Under Armour. So it comes back to perspective. Is the perspective of the challenge to top pick and bottom pick? is the perspective of the challenge to look at the gain and loss each and every day and try to top the gain, right? Top pick the gain. When the gain is maxed for the day, that's when I'm going to sell all the positions. Is that the game? No. That's an emotional game. That's an arbitrary game. What's the game here? The game here is putting the odds in our favor and knowing what decisions are going to be made if certain things happen. Do I have to worry and go, oh man, Target, it's going down. What do I do about it? Oh man, should I sell it? Should I hold it? What should I do? I don't have to make a darn decision. I don't have to worry about it. I don't have to do anything, right? Where's my stock exit level? 86.07. Where's Target right now? 86.70. Okay, I don't have to do a darn thing. I know that if I jump on video this afternoon at 2:30 Eastern and Target's below that level, I'm going to exit. And if it's above that level, I'm going to stay in. I don't have to look at Chevron this afternoon and go, oh, do I like it? Do I not? What does the 200-day moving average look like? What's the Bollinger Bands look like? What does this look like? What does that look like? What does so-and-so on TV say about it? I don't have to figure any of that out. I don't have to deal with any of those factors, that emotion, right? Everything when it comes to the challenge is very planned, very strategic, and the decisions are not based on what does Jeff think, or what does the community think, or what does this indicator look like. The decisions are made on probability and odds. We already know what they are, so the decisions are made before we actually have to execute them. I have a good friend. Many of you remember from chat when we had the chat system. His name's Tony. Tony in Maine. Tony flies airplanes. Sends me pictures of these things, and wow, pretty awesome. Pretty awesome, right? And a few years back, Tony called me, and we were chatting. And we had this discussion, and he shared with me two flight terms. And one of them was termed IFR. And I'm not a pilot, I don't fly or anything like that. So this was very new to me. But these two terms were IFR and VFR. One of them is basically flying based on the instruments, and the other is flying based on what the pilot sees. When a pilot gets into a cockpit, right, he can get in and he can use visual flying rules. He sees a mountain ahead. Okay, he goes up, right? He sees the field over there that he wants to land in. Great, he goes towards that field. He uses his visuals to do what he would like. And a lot of traders, that's what we do. We are VFR traders. We see things and we react to them. That's what we do. But there's a problem with VFR. VFR has significantly more emotion. Now, I should say that's a problem. It's more just an understanding. VFR has significantly more emotion. Yeah, you get to experience a little more. You get to see a lot more. But man, if you make a bad decision, it's, a little more costly, right? And then there are IFR rules, or instrument flight rules. Pilot gets in, boom, boom, boom. His instruments are all doing this. He knows what to do when the instruments do something, right? It says the instrument says this, so he reacts the way the book says, right? You have a set of guidelines to act with the instruments. What do you think the emotion is in something like an instrument flight rule? Not nearly as high, right? It's not nearly as high. It's not it's not something with as many unknowns. It's something where, how are you going to react to all the different possible situations? It's already known. It's already known. This is a concept that was big in developing the algorithmic challenge and moving the challenge away from the VFR. which has served me well. But you know what? VFR wasn't getting the job done. Wasn't as consistent as it needed to be. And shifting from VFR into IFR. Now that shift can be difficult. Why? Because you know what? My instrument tells me Intel's a signal. Intel buy it. Intel go. But when I look out, I go, wait a minute, that doesn't look right. Shifting to IFR has not been, it's not something that is easy. It is something that has definitely been a challenge for me over the course of this challenge. But it is something that, was put into account with this to be able to, try to eliminate a lot of these emotions, a lot of these elements that really drive traders insane. I wasn't convinced we could do it when we set out to do it. I wasn't convinced that IFR could get the job done in a challenge format. Just absolutely wasn't convinced. But as time went by, as we saw more signals come in, as we studied how those signals worked, as we studied how to kind of apply decision-making around those signals and around what stocks do after the signals and be able to apply options, I became convinced it could work. That we could apply the challenge format in an IFR type of manner and basically take that emotion out. Right? Now, it can't take the emotion out of those that want to top pick and bottom pick things and those that want to play the woulda, coulda, shoulda game. It's not going to take that out. Those are going to happen. And the only thing I can say is, hey, perspective, perspective, perspective. Is there anything about this that is trying to top pick? Is there anything in the setup? Is there anything here in the ATR that says we're going to get out on top? Nope. In fact, we haven't gotten out on top on any single trade. Not a single one have we gotten out on top. Is it going to get us in on the bottom? Nope. And in fact, there is not a single trade on the board where we've gotten in on the bottom. Does it say anything about what the market's going to do and what the stock's going to do the next day and all of that? Nope. Not a thing. Doesn't say anything about it. And so if I try to apply those meanings to it, what's going to happen? The emotion's going to be heightened. The fear is going to be heightened. Now, I mentioned back here, where do I go? I go to worst case scenario. Can I live with the worst case scenario? But think about what it's going to take. What it would take for the challenge from this point to go to zero. What would it take? You feel that fear of loss? Great. Fine. Think about what it would take. What would have to happen? Just one loss? Two losses? No, not even close. All right, what's happened when we've had losses before? Did it materially change things? Great. If we stack 3 big losses in a row, will it materially change things? Yeah, it'll take our gains from about 13,000 down to about 8,000. Yeah, that'll change things a little bit, how much money we can put on. If we lose 3 more in a row, it'll take it down to about 5,000. If we lose 3 more in a row, it'll take our gains down to about 3,000. So if we have 9 losses in a row, our gains go from, well, they're probably, 12.5 right now with where things have changed. Maybe 12.2. But our gains go from 12,000, 13,000 down to 2 to 3,000 if we have 9 losses in a row. Is that possible? It absolutely is possible. Probable? You see the data. We're running below run rates here, right? I put in the 30-day summary, and I'll release a 60-day summary when we hit it. But we are running below what the over 600 trades worth of data gives us. We're not running above pace. We're running significantly below. When I look at the data, when I look at what's gone on, and I look at what are the odds of 9 losses in a row, they're so slim that I don't worry about it. But even if it did happen, yeah, would it stink? Absolutely it would. It would be terrible. I would hate it. But is that acceptable to me? Yeah. Right? Well, we're still talking about gains, right? We're still talking about gains. What's more probable? Trade's working or trade's not working? What's more? What are the odds? More. If I now start to put emotion into the odds, if I start to try to bring in VFR, my own decision making, my own choices, my own, well, this one's doing something different, so let me go do this, this, and that. What do I do to my odds? I increase the odds of, a big bad losing streak. I only increase it. And so what's the point of doing it? It's a process, not an event. One individual trade is not going to make a challenge. One individual trade is not going to break a challenge. Now, is the challenge a little more susceptible when it's at $3,000 to a losing streak? Kind of knocking it out? Absolutely. Absolutely it is. But it's a lot more resilient around these levels. But what's going to happen? As these levels increase, which they will, maybe I shouldn't say that, but they will. As these levels increase, what do you think is going to happen to the emotions for most traders? Let me tell you exactly what's going to happen. The highs are going to feel higher. The lows are going to feel lower. The up days are going to feel that much greater. The down days are going to feel that much worse. And so at some point, right? At some point, it's about grounding and it's about perspective. It's about grounding expectations, tempering, the fears, understanding the worst case scenario, and instead of playing the would've, should've, could've game, instead of going out looking for affirmation, trying to be right or wrong, putting the proper perspective in, understanding gains are going to come, losses are going to come. We're not too high, we're not too low. We understand our worst case scenario, and we run with the odds. I don't know if this helps. I don't know if this adds, value to being able to deal with, some of the swings that, a challenge is going to go through, some of the options. I'll admit in this challenge, we have not dealt with big swings. No, we have just not dealt with big swings at all. We have had very small swings, just small kind of staircase up, very, very light kind of, dips down. You go look at past challenges. I've had challenges, go from 3K down to 1K, up to 10K, down to 4K, up to 20K, down to 3K. There have been major swings in challenges, historically. We have not had that here. Will we have those eventually? Yeah, we'll have challenges with those. This one could have some big swings in it, right? There's nothing about the way it's set up to take away, some of the big swings that could happen. But when it comes to, hey, if you're feeling the emotion, if you're feeling that burn, that aggravation, that the market's up, we should be up more today, or that just some of those just really kind of, I shouldn't call them CNBC-isms, but just some of those very common trader emotions and the things we highlighted. Bring it back to perspective. And if your worst case scenario, if the worst case scenario is not acceptable to you, move on out. There's absolutely nothing wrong with that. Close a trade or two. And then you know what? If the trade ultimately worked afterwards, who cares? Doesn't mean you made a bad decision. Doesn't mean you were wrong. Doesn't mean you're less of a trader. No. You dealt with the factors that you could deal with at that time and made the best decision for you at that time. And that is the correct way to go. No matter what happens later. And as long as you always stick with, hey, I'm willing, in my worst case scenario, I'm going to stick with that. And if I can't handle my worst case scenario, I'm going to back out. You're never going to make bad trading decisions. Yeah, someone's going to come in and say, man, you should have held that, duh. And it's going to burn. It's not going to feel very good. But in the back of mind, you sit there and you go, you know what? I made the best decision I could make at that time for the information that I had at that moment. And if you can say that about your trades, you can sleep well at night. If you can't say that about your trades, it's going to be tough. It's going to be very, very tough. And it's only going to magnify as as time goes by, and as different stuff happens in the market, and as there's this news and that news, and this change and that change. So hopefully this gives you some perspective. Helps kind of put a little understanding of not just some of the emotions that traders deal with and whatnot, but how it applies specifically to the challenge itself. And how this is how the challenge is designed to be able to deal with trading, and to be able to have trading, but to mitigate those emotions, because we know what our worst case scenarios are. We know what our actions should be. We don't have to make decisions all the time, every day, every minute. Oh, it just ticked. What do I do? Ooh, it ticked again. What do I do? We know what we got to do. We know what the consequences are at those different levels. We know what the gains are at certain levels. We know what the losses are at certain levels. Intel this morning, I didn't have to wake up and go, man, well, what do I do with Intel? Do I hold it? What do I do? Do I take some off? What should I do? I don't have to make any of this. We didn't have to make any of that from a challenge standpoint. No, we knew what. Boom, it hit our 2 ATR. That's when we take off a little bit and we let the rest go. We readjust our parameters and we run. And what did we do? We did exactly that. And you know what? Intel may dip from here. It may go down from here, right? We did that with Boeing, and Boeing decided to just kind of dink around, and ultimately we were knocked on out before it, had its stronger dip. And that could happen with Intel. And if it happens, so what? We get our next signal, we go trade it. We do the exact same process. We repeat, and we repeat. And you know what? The market next month is going to be different than the market this month. And 2 months from now is going to be different from the market last month. And the market's always going to change. It's always going to have different stuff. But you know what? The signals are repeatable. The process is repeatable. The process is tradable. Yes, there will be times where there are fewer. There will be times where there's more. But it's not something where you have to strike while the iron's hot, because you know what? Your iron's going to get cold. Yeah, there'll be up times, down times. But this isn't something where you have to say, well, you know what, man, I didn't make money over the last 3 weeks, so you know what, oh, man, you know what, I missed out on this huge opportunity, and there's not going to be opportunities in the next 3 weeks. No, that's just a ridiculous notion that the market gives, that the market brings in and tells people that, just really isn't rational, that really isn't true. And so as we go forward with the challenge, keep that in mind. Process, not an event. An absolute process based on odds, an absolute process based on taking emotion out of the trading, taking the millions of decisions that create emotions out of the trading, and running with the odds. And yes, we're not going to top pick. We're not going to bottom pick. We're not going to get the best prices all the time. We're not going to, we're going to get out of stuff when it, ultimately goes our way. But you know what? There's going to be that other side of the coin a lot of times too, where we get out just before the stock goes against us in a big, big way. And we've had more of those than stocks that have gone for us after we've gotten out. And we will continue. Why? Because we're playing the odds. Because we're absolutely playing the odds. And if we analyze one specific stock and get emotionally invested in one specific trade and ultimately get wrapped up in that singular trade, it affects all of the next trades afterwards and being able to get into them. And it affects our perspective and heightens the emotion. And everything about the challenge is designed to get away from that. Thanks for hopping on. Have yourselves a fantastic day. I'll be back on with you here in about 90 minutes, and we'll talk to you then. Take care.